Hello everyone. This is lecture 2 in the series of weighted average cost of capital, where we will be talking about debt financing. Now, what I've done here is I've came out with a little example of a bank loan which we borrowed, and I put the figure as 200,000. Now, I also put bond financing here because this also is a way of financing through debt. But what is common with its debt financing or bank loans? We will have to pay interest. In the bank loan option, we pay interest to the bank, and the bonds, well, we pay interest to the bondholders. Now, in my example, we've taken a loan of 200,000 at a rate of interest of 10%, right? So if this is the case, well, 200,000 rate of interest of 10%, our annual interest will be, well, 10% of 200,000, that's 20,000. That could be pounds or dollars, doesn't really matter. I've also assumed that we have a tax rate of 20%. Now, what we've learned, or what you will see in your slides, is the tax shield. Now, we will mention, you will see at some point, the slide will mention about the tax shield. Now, I know this word sounds a little bit horrible, so I'm gonna explain this using one simple example. What I've done is I've taken in an example of where we have no borrowings. So this is my company. I have no borrowings. So if I have no borrowings, I want to find out, well, what is the tax without interest? Now, if I've got no borrowings, then surely I don't have to pay any interest. So if my operating profits or income is 100,000, then my tax bill comes to, well, 20% of 100,000. So that's 20,000 pounds. Yes, I'm showing pounds for my example. And then let's work out that what the tax bill is with interest. So same example, operating profit 100,000 and then interest 20,000. Yes, so it's this interest here. So that's 20,000. So I'll take this away. I'm left with profit before tax of 80,000. Now remember, interest is an expense. Having done that, well, what is my tax bill? Well, in this case, it will be 20% of 80,000, and that gives me 16,000. Now, what's the deal here? And couldn't I just have said that the cost of debt when it comes to bank loan is, well, 10%? Well, the answer is not really. Because think about it, with interest, so referring to my example here, without interest, the tax bill is 20,000. With interest, the tax bill is 16,000. I hope you can see that, well, with interest, we save 4,000. Yes, so it's 20,000 minus 16,000. So I'm sure you will agree that, in effect, the cost of the debt financing is not 20,000, but 16,000. This is because we save 4,000 in terms of tax. Now, is there a way that we could have got to this figure straight from the 10% when we're given 10% interest rate? And the answer is yes. See, if we take 10%, so 0.1, 10%, and we multiply by 1 minus 20%, which is the tax rate, so 1 minus 0.2, this gives us 0.08, or if you want, 8%. And if we take this figure here and we multiply by the loan figure of 200,000, well, we get to 16,000. What this means is that the true cost of debt for a business is the borrowing rate. Think about it, is the borrowing rate multiplied by 1 minus the tax rate. Now, if you go and have a look here, 0.1, isn't that my borrowing rate? Remember, my borrowing rate is 10% or 0.1. Multiply by 1 minus 0.2. So 1 minus 0.2 multiply by 0.1. This gives me 8%. And this multiply by 200,000. So in effect, that is my cost of debt. Now, if you're given a cost of debt of, let's say, 12%, sorry, 12%, and you're given a tax rate, so let's say a tax rate of, let's say, 30%, and you're asked, well, what is the cost of debt? Remember, the true cost of debt would be the borrowing rate. So in my example, 0.12 multiply by, well, 1 minus the tax rate 0.3. Yes, so in effect, my cost of borrowing would be 8.4%. Yes, so what is the takeaway from the cost of debt? The cost of debt is whenever you borrow, so in my case 200,000, and you're given an interest rate of 10%, the cost of debt is not 10% because remember, this results in tax savings. The actual cost of debt would be the borrowing rate multiplied by 1 minus the tax rate. Hopefully this gives you an idea of how we calculate cost of debt. I'm going to stop the lecture here. You can go over it again and practice in your own time, and I will see you in the next lecture.